Hi, good evening, traders. We are tonight on the 20th of September 2021, 8:09 p.m. Indian Standard Time, and we had a pretty high volume, decently high volatile session for the benchmark Nifty. Came down quite a bit, touched an intraday low of 17,586, so close to that, breaking the 17,600 level, bouncing back to manage a close down 126 points, 17,730. Now, as you can see, we had a small gap up over here, which we had marked a few days back, and the index has managed to bounce back or managed to find some support from this gap. A clearer picture of this volatility will be a little more clearer if we come down to the lower time frame. 75 minutes chart right in front of you, which clearly shows the way the index had fallen for most of the day's trade, but the bounce back came at the last hour or so. The private sector banks, especially ICICI Bank, contributes majorly to this particular candle. Now, of course, we had this blue arrow marking these negative divergences which are shaping up with the relative strength index indicator. Yes, it is there, but divergences do not always necessarily mean a reversal. A consolidation is also highly possible. But as we approach the derivatives expiry day after tomorrow, it seems like we have to deal with a heightened degree of price volatility. Super strong support is within this zone, which essentially holds the short-term trend up. We've got a beautiful point of control from the volume profile. So this is 17,450 and the 17,300 kind of zone. From a short-term point of view, I think that this volatility will definitely stay. Let's take a look at Bank Nifty. As you can see very clearly, what a low it made, 37,350, and bouncing back to close at 38,224. Extremely sharp bounce back from the index in the last hour, and this is essentially coming in from, if we take a closer look at the banking, then it's essentially ICICI Bank, this one. Most of the banking stocks, the private sector banking stocks, are well poised. Yes, they've been a little choppy, but I feel that the banking participation should continue if the index holds on to the short-term trend and just even manages to consolidate. Even if the Nifty manages to consolidate, it's fine. As long as it's above 17,400, I think we should maintain a bullish bias. We should look to buy on dips. We can look to buy into high momentum breakouts. Overall, maintain a bullish bias. Talking about breaking of high momentum, breakouts on the upside, it was quite a surprising day, in the sense that I had spoken about State Bank of India and how the stock has been inching close to a level for 3 days. We did get a breakout. It was holding fairly okay, but then it was quite a surprise on the downside. Day before yesterday, I believe I spoke about Sun Pharma. That stock gave an exceptional move up, an intraday move up, and it did come down. So this is like quite a bit of volatile movement from most of the stocks that we noticed in today's trade. Let's wrap it up by saying that the trend is not reversed yet. There are evident signs of momentum slowdown. This evident sign of this momentum slowdown is injected a bit of volatility into the system. We have the derivatives expiry day after tomorrow. So overall, I think we should be a little careful, trade less, trade a lesser quantity, take relatively lesser risk per trade, just to sail through these turbulent times. As long as the trend still stays intact, we should get better trading opportunities soon. So let's see what's in store for the next 2 days and how we can play out the next contract. that is the contracts for the month of October. Till then, keep a positive bias and check more on your risk management rather than profit generation. Thank you. Trade well and trade wise.